Hi, welcome to the Market Alert for Friday, the 12th of February 2016. So in yesterday morning's pre-market session, the market drops 250 points, and the reason for that was in the updated video that I sent out showing the relationship between Deutsche Bank and Barclays Bank. Deutsche Bank has a problem, although it is being officially denied, so that means it's official that they do have a problem. And if you want to know what I mean by that, then have a look at yesterday's update. So the market then found support, traded sideways, and then eventually the market moved back up, bringing a return of around 200 points to the blue line here, and then the market selling off sharply as it's lost complete faith in Yellen and the Federal Reserve and central bankers globally. And that's the problem that we're actually facing, is that people have absolutely no faith in these people now, that they have no idea what they're doing. And that's self-evident by the market's reaction there. You can see the market coming down again 200 points, just under 200 points for this move. Sorry, just over 200 points actually. It's 100 points between each blue line, so just over 200 points there. The market then in the quiet session, we have a buy signal, which is a loser. Then we have another one to get back 60% of the profit, and then we have another sell signal, which is profitable, and then a second one, which is a bit of a dubious one, because guess what? Here they go again, as ever, predictable. 3 o'clock New York time, they ramp the market back up 200 points, and this is a 100-point bar. So you can't tell me that people were buying stocks with the backdrop of what's actually happening with China slowing down, the massive deflation coming, and all of the other stuff that is going into the mix at the moment. Looks like some of the banks are starting to fail again, and that's without all of other issues as well. But it is an election year in the US, and the last thing Obama needs to go out on is a financial crash. So they're going to do whatever they can, including throwing all the money they can in the kitchen sink at the market. And this is just so blatant. It really is. I mean, if anybody says to me the markets aren't manipulated, then they need to sit and watch New York 3 p.m. or 8 p.m. in the UK and just see exactly what's happened. This has happened 4 times this week, which I would say were pretty good odds as far as the market or statistics go, improving a theory. I don't need to prove anything because it's even available on the internet that the plunge protection team have been in situ since 1989 when Reagan was in power. It was set up by himself. It's been used on many occasions, but not as frequently as it's being used at the moment to keep this Ponzi scheme alive. All's being fairly quiet on the overnight. A bit of activity now coming into the market. We've got some news out at the moment. Let's just have a look there. We've got the German preliminary GDP, and I think that's going to be appalling given what's going on in Germany now as well. So fairly quiet. It's about a 100-point range, which is enough for the pre-market session. Now you can see there's enough range there to have actually given some points. And of course the market's waiting to see what happens later on this morning with Deutsche Bank. This is not open at the moment, but pulling back a bit from yesterday's low. Just pull that in there so you can see it's coming back just a bit off the Feb 10th lows there. Barclays Bank below the psychological 150, 147.85. This is already starting to trade, or trades on the overnight market. So in the daily charts, you can see we're heading back down. We might as well remove all of these to the upside, because this has no strength at the moment unless Yellen decides to turn on the printing presses once more. Market closed below 15.572 and then 15447. We'll see this market retesting the August lows, which are there at 15254. Let's just draw that in there so you can see it, and just remove that one as well. And let's save the chart there so they remain on there. So watch out for 15,572 this morning. See if the market goes through there. On the rest of the news front, economic news, that is, Dudley speaking at 3 p.m. Stay out of the market, even though it's a medium impact. Wait for about, he'll probably only speak for about half an hour, I would have thought. You'll tell by the price action, because it'll become fairly quiet once he's finished, or unless he says something to boost the market, which is very unlikely, because if we just switch tech here at the moment, the gold market has exploded this week, and that's thanks to Dudley and Yellen. We just go back, and in fact lines around the block to buy gold in London. Banks placing unusually large orders for physical as well. Well, they've been doing that for a long time. They've been manipulating the gold market for some time now. The paper futures contracts to the actual physical gold has reached a record high of just under 500 pieces of paper to 1 ounce of physical, and the lid's coming off because everybody wants to take delivery of the physical. They have no faith in Yellen, Carney, Super Mario Draghi, and also the Japanese finance minister, whose name escapes me at the moment, I can't think. But more on Japan in just a moment. So yes, yesterday in London we had people queuing at ATS bullion to actually get silver. China, this is people trying to buy gold in China because they can see the wheels coming off this global economy. It also is part of their, to be fair, it is also part of their lunar cycle holiday as well. The last 7 days people do tend to buy gold and silver as well, but not on the scale that they saw during yesterday. But yeah, it's been quite something. As it says, it's been crazy. It's been the best week since 2012. We've had people queuing round the block, said Michael Cooper of ATS Bullion, a family-run firm that trades online, also from an outlet in the West End. And also Bullion by Post, the biggest online gold dealer, said it had already taken record day sales of 5.6 million as traders pile into gold following fears that the world is on the brink of another financial crisis. It's not on the brink, it's here, it's already started. So the gold price is up thanks to what Dudley said the other day, and the fact that Yellen said nothing. And now she's damned if she does and damned if she doesn't, because if she didn't say anything in the last 2 days that would help the market, which means that she's clueless and hasn't got an idea of what to do. She's watched Japan, who have spent 4 trillion yen last year. If we just move. Yes, unfortunately for Japan, Abenomics has failed miserably. 16 months of Japanese printing, and here you can see in this graph here, you've got the green line there where they've printed money, and look what the reaction has been. They've also gone negative on rates. It doesn't work. When are they going to wake up and realise this just doesn't work? So there's no chance of Yellen doing too much at the moment, because she probably hasn't got an idea of what it is she needs to do. But they have hinted at negative rates, and all that's going to do is escalate the problem. The banks aren't going to make any money with negative rates, apart from taking money off those who have money deposited, which seems to be fairly slim these days, as the government want to keep their debt-based economy going by getting people to go out and spend what bit of money they've got to keep the illusion alive. It will be interesting, but it doesn't work. And you think they would have actually clocked this one by now, but they haven't. What's interesting here, just going back to gold as well, is that Canada sells nearly half of its gold reserves. They'll regret doing that, I can tell you that now. The last thing you want to do is to sell off your gold, and that includes Gordon Brown in this country as well. And this is why, in my opinion, the people are actually smarter than some of these central bankers, because they're actually buying the gold and silver as well, and I happen to be one of those as well. I've been doing it for some time with seeing the writing on the wall. So a bit of, I have to let you know what I'm doing there, not financial advice also, it's just something that I was able to see that there was a storm brewing, and it's certainly starting now. We've got another thing there, war on cash, central banks as well. They're trying to get rid of cash as well. Andrew Haldane of the Bank of England has put a proposal forward to try and remove all cash out of the system and go electronic as well. It's not just the UK. There are a lot of countries that have already been discussing this. Sweden is another one that springs to mind, but you'll see a lot more about this as well. And the reason behind it isn't convenience. It's just so when there's a banking problem progresses, then you won't be able to withdraw anything out of the banks, which is why the situation with Barclays Bank, going back to that the other day when they ceased trading for 8 minutes and then they started again, was a very good idea, because if account holders had caught wind that Barclays had suspended trading for any longer, then you're going to see the Northern Rock queuing and getting the money out. So they've got to be very careful about what they do when it comes to suspending trading of bank stocks at the moment, because immediately that's going to send alarm bells. We have a template from 2008, i.e. people getting their money out. So again, watch carefully and just have a look around, see what's going on. But for me, this is the best news resource. You can forget the mainstream. They're just talking heads. It's the same old thing. They're just trying to keep the illusion alive, get people into the market, take the money off them so they can cover the positions. It's always how it's always worked. Even in the early days when I started trading in 1991, in those days there was no internet, everything was by phone, and you would know any sort of movement in the market was a quote that was given by a financial expert to the Financial Times, which was enough to move the market. Now information is everywhere. Just go onto the internet, you can get what you want. But the great thing is that the alternative media is taking a massive foothold now, because people don't believe what they see in the mainstream, and hardly surprising when there's only about 6 or 7 corporations that can control it. It's called propaganda, not news. So this is why I use Zero Hedge to actually pick up all of these bits of information, charts and everything else. It really does give you a very good background to what's going on that isn't being reported, especially something like this yesterday, the queues around London, people buying physical gold. You would never pick that up off the BBC or any of the other financial channels. And let's have a look at a few other things before we conclude. We'll finish off actually with the implied volatility, 24.95. This is starting to increase, but I think we're going to get a big run on the implied volatility as we test the recent lows and also the August lows as well. And don't forget, China's back on Monday as well, so that's going to be really interesting to see how things fare there. Depends what they do. They might pump another few billion into the market just to give it some stability. But who knows until Monday morning, so we'll have to wait and see what happens during their day session, which obviously will pick up early on Monday morning. So that's it for today, also for the week. I will speak to you in Monday's market alert, unless there's something to report later on today. Other than that, have a great day and enjoy your weekend. Thanks for your support. I will see you on Monday, and as ever, thanks for watching. See you in the next one.